Hey there, Steve Rubis with another installment of Capital Markets Investor Relations in 2 minutes or less. It's a Sunday in Chicago, and we're on location. And like Michael McDonald and the Doobie Brothers, we're taking it to the streets, and we're here at Chicago Avenue and Halsted Street, which, as my gaming and lodging viewers will know, is the future home of Bally's Chicago. I thought Bally's would be a great location to be a segue or a connection to our wrap up on our Delta guidance reduction and related to some of the experiences I had when I was in the gaming and lodging industry. And the key is, these are the 5 takeaways investors need to remember or executives should take away from this Delta guidance reduction. And the first is, guidance drives your valuation. You need to treat it with respect, and you need to double check and triple check the guidance you give investors. If you get it wrong, it's going to cause valuation destruction. Number 2 is this idea of the best practice is to do an 8K and a press release. The 8K, yes, it covers you with the SEC, but the press release is what's going to allow you to get the widest dissemination and allow you to present and communicate the right data in the right format to remove the doubt and the concerns investors have now that you're reducing guidance. And then the third thing is, the off-cycle guidance reduction is one of the worst places you can find yourself as a company. Once you get into this cycle, it's hard to pull yourself out of until the next fiscal year. There's probably going to be future changes to guidance coming from Delta. And then the other key piece here is, if you miss the first quarter, you're going to miss the entire year. I can't stress this enough. You have to get the guidance right out of the gate, or you're going to upset investors and cause value destruction. And the key thing to remember as a public company executive is there's an interplay between the timing that you provide your financial guidance and the confidence and visibility you have into that guidance. If you're like Delta, you're giving it at the beginning of the year, you have very low visibility and you should have low confidence on that guidance. So don't be aggressive. When you don't have the confidence and visibility, you need to be conservative with your guidance so that you don't cause future surprises. Now let's relate this to my time in the gaming industry. And the company I worked for, they found themselves in a cycle where they were lowering guidance ahead of investor conferences at multiple points. And it took 6 months for the company to pull itself out of that cycle. So remember, get the guidance right, it drives your valuation. Thanks for watching.